The crypto market is pushing higher up just over 1% in the past 24 hours, and more than 4% for the week, but investor sentiment still sits deep in fear territory. So what's driving this stealth rally? From the Fed's surprising stablecoin proposal to Binance's comeback, and Wall Street's growing crypto appetite, today we're unpacking the key moves shaping the next leg of this market. Welcome back to the Crypto Loop, where we decode the trends that actually move crypto. Let's dive in. Section 1. Fed opens payment rails to stablecoins. The biggest story. The Federal Reserve just proposed a so-called skinny master account, allowing regulated stablecoin issuers direct access to Fed payment systems like Fedwire and ACH. Why does that matter? Because it gives compliant stablecoin firms a way to settle transactions without relying on commercial banks, reducing credit exposure and minimizing the risk of liquidity crunches. This is a major step toward legitimacy for the $269 billion stablecoin sector led by USDT and USDC, and it signals that regulators are starting to take a pragmatic approach to crypto infrastructure. Keep an eye on community and institutional feedback around this proposal, and especially how Bitcoin and Ethereum react. After all, stablecoins drive nearly 40% of on-chain gas fees, according to Tether's CEO. Section 2. Binance ecosystem regains strength. Next up, Binance is back in the spotlight following former CEO CZ's recent pardon. Binance Link token showed renewed strength. BNB posted a weekly gain of 1.7%, while some meme coins on the BNB chain saw eye-popping surges, one of them climbing over to 169,000% this month alone. That sparked optimism, but it's not all smooth sailing. Derivatives data shows open interest dropped 3.4% in the last 24 hours, hinting that traders are still playing it cautious. Looking ahead, the November 30th Kyrgyz parliamentary elections could impact Binance's national stablecoin project there, so geopolitical headlines may keep influencing sentiment. Section 3. Institutional tailwinds keep building. And on the institutional side, momentum continues. Grayscale just launched its Crypto 5 ETF, featuring heavy Bitcoin 74.6% and Ethereum 16% allocations, plus a small basket of altcoins. At the same time, Bitcoin miners are under pressure, with collective debt now topping $12.7 billion. Firms like HIVE Digital are pivoting into AI infrastructure to offset the squeeze from post-halving margins. These moves signal a maturing ecosystem where institutions are diversifying and miners are evolving to stay profitable. One more key catalyst to watch: Coinbase's Q3 earnings coming up October 30th. The stock is already up more than 42% this year, helped by JPMorgan's bullish call on its base layer to network. So, what's driving today's gains? A mix of regulatory clarity, Binance stabilization, and institutional innovation, all giving the market a boost, despite a still cautious sentiment reading of 30 on the Fear and Greed Index. But the question is, will the Fed's stablecoin proposal be the spark that finally propels crypto out of fear mode and into full momentum? Keep an eye on Bitcoin's $115,000 resistance and Ethereum's $4,950 yearly high. Those levels could tell us everything about where this market heads next. You're watching the Crypto Loop, your daily pulse on the digital economy. Don't forget to like, subscribe, and ring that bell so you never miss the loop.